Phase 1 of the trade deal between the US and China is officially complete. Are we moving on to Phase 2 very quickly? Or is this Phase 1 and done? As in, this deal is done before it's even fully signed. And I'll talk about that in a minute. But call me highly skeptical about really either side, especially China, living up to anything that they promised. There's already been a bunch of comments from a bunch of different experts coming out. CNBC actually, when they weren't pumping the stock market, and the stock market closed at record highs. We had the Dow close above 29,000 and the S&P 5 at 29,030.22, and the S&P 500 close at 3,289.29. The dollar index is still above 97.21, but the Chinese yuan to the dollar is down below 7. So there's a lot of details that have come out. Zero Hedge has a whole story on it. It's a Bloomberg story, 94-page Phase 1, quote-unquote, trade deal. But there's already, from looking at expert comments on this and watching some video interviews, and I did watch some stuff on CNBC Bubble Vision when they weren't pumping the stock market, they did have a mostly bad spin on the trade deal. One of them is like, it's a watershed moment. It's such a great trade deal. It's historic. You know, the Trump administration sending their people on for talking points. But there was a couple interesting interviews that CNBC did have. They did have one of the trade people for Vice President Michael Pence. Let me see here. I can attach the interview in the information section. It was very interesting. And the guy was talking about how, you know, this doesn't fix anything with Huawei. He called Huawei on CNBC on Wednesday. He called them a Chinese spying arm of the Chinese government. So he said that on CNBC. So that, if anyone has any optimism about Huawei being included in any future Phase 2 or Phase 3 or whatever we're going to go to on the trade deals, let's just say if Trump wins 2020 re-election, I don't see that happening. So the other stuff was, there was another expert CNBC had on that China can quit trade deal if U.S. reimposes tariffs. The U.S. is obviously not going to reduce the tariffs immediately, not until the 2020 election, I believe. So China is supposed to buy a lot of agriculture, a lot of oil and energy and LNG. So we'll see if they actually do it. Now, Chinese state-run media, which basically they will not say anything unless it is approved out of Beijing, out of the Chinese propaganda department, which is 10,000 person building, I believe, in Beijing. So they will not say anything unless it's approved. And the official opinion from Chinese state-run media on the Phase 1 trade deal has been less than optimistic for weeks, if not over a month. So even though Trump is very optimistic about the trade deal, the stock market is very optimistic. The Dow and the S&P here in the U.S. are very optimistic about the trade deal, and other people that CNBC is putting on about the trade deal are optimistic. I am far more cautious, far more skeptical, and let me tell you why. So there was a very interesting interview. I'll put it in the information and description section from Leland Miller, again, China Beige Book. He's lived in mainland China for over a decade, boots on the ground, extensive contacts in the business world in mainland China. He gets a lot of data. He recovers a lot of data, boots on the ground, that the government statistics on China may miss or intentionally lie about. And his comments that came out on January 15th, I think the interview is actually recorded on Tuesday afternoon, though. But he was very skeptical about this trade deal. He said, quote, "This relationship is going to continue to deteriorate over the course of years, even with the trade deal. Quote, this is a competition that's going to go years and decades forward. Competition includes the race for global 5G dominance as the U.S. pressures allies to drop Chinese telecom giant Huawei from their networks." And he said the Trump administration is also gearing up to increase export controls targeted at China this year. So, quote, "I think the idea that people were expecting something in the next few months was unrealistic. But despite the looming battle between the two nations," Miller said, "for this year, both sides have a reason to stay on their best behavior." Well, China's probably hoping that Trump does not win in 2020. But for now, it looks pretty good for Trump winning re-election in 2020, especially with the amount of money he's raised. And the disaster that is the Democrat debates and all the other things that is going on. And now there's infighting between Bernie Sanders and Elizabeth Warren. My God, it's just ridiculous. And it should be a good year for the markets. A joint statement that was ironically this infighting between Bernie Sanders and Elizabeth Warren within 2 weeks of a primary, right? The Iowa caucus or one of those. I don't keep up with the election that much. It's just, I didn't watch any of the Democrat debates. It's just, I don't need that type of stress. Listening to them talk about spending massive amounts of money and taking away more of my rights and taxing me up the wazoo. But the details of this trade deal sound like a really bad conditions on a friends with benefits relationship or a situationship if you're a Generation X or a millennial. There's just so many loopholes here. It's just no fun. There's already articles coming out like the $95 billion centerpiece of the trade deal is already in doubt. China's pledged to buy almost $95 billion worth of additional U.S. commodities as part of a phase one trade deal. The market is not so sure. Prices fell Wednesday for most raw materials that are part of the agreement, with the Bloomberg Commodity Index declining 0.4%. Traders said actual evidence of increases in shipments is needed for market gains. So people are very skeptical. So the stock market was not skeptical. Let me talk about who else is actually skeptical, and that is the bond market. So the bond market is calling, here in the US, the Treasury market is calling bullshit on this trade deal because people retreated. Some people may have sold stocks, not everyone, but some people may have faded this rally in stocks, in US stocks, and moved into bonds because the 10-year U.S. Treasury yield is down. So what that means is people are going into bonds. When people go long bonds like the 10-year U.S. Treasury, that means yields fall. And yields got as high as, 1.91, I think, on the 10-year U.S. Treasury in the last week or two, and now they're down to 1.788. So people are retreating into bonds on news of this trade deal. That would be more smart money, I would say, calling bullshit on how this phase one will actually play out in the weeks and months to come. So if you want to read more about the skepticism that Leland Miller of the China Beige Book has, I have the article for that. Meanwhile, the Chinese central bank keeps injecting more and more emergency liquidity stuff. The amount of liquidity injections and bailouts that China is doing is enormous. There's so many of them and very difficult to keep track of. There's so many that are happening right now that even though they've gotten the currency back below 7, so it's not running away way above 7 like it was in August of 2019, that there's so many bailouts and emergency liquidity injections in China. There's over half a dozen different types of bailouts that she has just hired in the last, this story came out at the end of December 2019, that he's had to hire 12 new financial experts to help him with all the stress and financial bailouts. So there is now 12 bailout czars that she is overseeing. This Bloomberg article by Richard Breslow that was on Zero Hedge is bonds are not buying the China trade deal. A lot can still go wrong. Certainly doesn't make you a cynic to poke holes in the idea that the trade dispute between the US and China is coming to an end, courtesy of the phase one deal being signed today. There's an awful lot of questions left unanswered, and a lot can go wrong. In fact, I just saw from a tweet in the last couple hours from Danielle DiMartino Booth. Let me just pull up my phone here. Hopefully it doesn't beep off with the college girl. China has not agreed to additional tariff reductions or eliminations as part of the deal, but will need to issue waivers or adjustments to meet purchase commitments. That's the official statement. That was at 3:30 p.m. that came out Eastern time. So there's all these conditions. There's so many loopholes. This phase one trade deal seems more about Trump. And like I said, the official Chinese media is not as optimistic, not as enthusiastic as CNBC Bubble Vision. Now, there was some more measured interviews about the trade deal, especially from, let me see if I can pull up the interview here with the Mike Pence guy. Let's see here. He works in Mike Pence, Vice President Mike Pence's regime. Let me see if I can pull this up. Okay, here we go.
Joining us now is Vice President Pence's Chief of Staff, Mark Short. Mark, great to see you today. The president has said this deal is fully enforceable. When it comes to the transfer of technology, can you explain how enforcement would work?
Sure. The United States Trade Representative Office will be coming out with more details on that in the next 60 days or so. But there will be a dispute resolution team. So you have people from both the United States Trade Representative and from China's side that will look at individual disputes that are brought before them. And inside that construct, they'll assess whether or not there are violations of this deal or not. The forced transfer of technology has been a big concern from this administration from the very beginning. And it's one of the items that the president said was not just a trade imbalance, but also wanting to make sure that American companies don't continue to have their technology stolen and taken over by the Communist Party of China. And so being able to take initial steps in addressing those problems is important, but there's going to be, we believe as well, hopefully a second phase of this that will continue to tighten those constricts so there's no longer that same theft of technology.
Mark, just wanted to go back a step, and there's obviously future phases still to come, and there's been ups and downs to reach this first phase. But how significant is this particular moment in the president's first term in office, do you think?
Well, Wilf, I think it's an incredibly historic moment. And the reason I say that is because I think for the last couple of decades, we've had Republican and Democrat administrations alike who believe that when you allow China in the World Trade Organization, you'll see other sorts of changes that have not come to fruition. And in the meantime, China has continued to cheat on, in essence, trade deals. And so this president said the era of economic surrender is over, and he basically assessed tariffs in ways that were crippling the China economy, so they came to the table and made real concessions. We will see how this goes. It is an opportunity for both nations to find a pathway forward that is prosperous for both. But as your network has covered, Wolf, this is a huge day in resetting the relationship with China. But tomorrow as well, the Senate will be passing the United States-Mexico-Canada trade agreement. So within 2 days, you're going to have two huge trade deals. And I think this economy has benefited enormously from the president's tax agenda, his anti-regulatory agenda, and now I think you're going to see the fruition of the trade agenda coming to bear.
Okay, I guess they cut out the part where he said Huawei. I guess it was too controversial, or maybe the Chinese media told CNBC to not put it on their website. I didn't see it there. That was the one clip from Mark Short, but I watched the interview live on CNBC, and they did specifically ask him a question on Huawei, and he said that Huawei is a national security violation for the U.S. and that Huawei is an arm of the Chinese military and Chinese spy service, so that they were intelligence arm. So he did not say anything encouraging about the U.S. removing Huawei from the entity list, about the charges being dropped against the Huawei CFO who's stuck up there in Canada living in her $10 million house arrest mansion. And Trump also recently, the Trump administration wants to block more sales to Huawei. So there's been stories that have been coming out about Europe in the United Kingdom with Boris Johnson and also other parts of Europe where President Trump and the Trump administration are trying to stop Huawei 5G from inking deals, for 5G. It's after midnight. Gonna make some flubs here. Although I do have a lot of energy after my 3-hour workout. Had some protein shakes. Feel great. So this trade deal, now on paper it does look good. $200 billion worth of goods purchases in the next 2 years sounds good. But will the Chinese actually do it, though? Will the Chinese government actually keep their word? They really have not kept their word at all for 20 years, and they've gotten away with it. That's the U.S. government's fault. That's the U.S. corporations' fault. Republicans and Democrats. There's so many around here in the D.C. metro area and in New York City, but there's especially here. There's so many Republicans and Democrats on the Chinese government payroll. Also on the payroll, too, in a lot of aspects, whether it's lobbyists, think tanks, and others of Israel government, Saudi Arabia, Qatar. Okay, let me see. There's four main governments that are doing most of the lobbying. So Israel, Saudi Arabia, Qatar, and China. Those are the ones that are spending big bucks here in D.C. Brookings Institute and others. Mike Cernovich had a documentary about Qatar government for Brookings Institute, but China also heavily funds the Brookings Institute. 6 phases. I don't even think, at this point, I'm not even sure if we're going to get past 1 phase. We have to see if China will actually make the purchases they're going to say that they're going to do. But there's so many loopholes out of this that I said earlier in the earlier in the live stream show that China can back out and the U.S. can back out. It's like a really bad conditional friends with benefits relationship or situationship that these Generation Xers and millennials are doing. It's a very, I've talked about this in the past with the U.S. and China. It's a very unhealthy, dysfunctional relationship. It's a toxic relationship. Neither should be in a relationship with each other. They do not play well together. So I have a number of other articles if you want to get into depth on this, that the bond market's calling BS on this, and the longer interview from the China Beige Book CEO. But I think a lot of skepticism is warranted. But the stock market doesn't seem to care, but the other markets, like the commodities market, the bond market, are starting to be more skeptical. But the old saying is that the smarter money is not in the stock market. The smarter money tends to be in the bond market. One works out for 3 hours at the gym with breaks. China doesn't manufacture high-end products, A3 Sky Warrior. China tends to actually just assemble. They don't do a lot of the value-added stuff. In fact, I've seen diagrams, whether that's from Peter Zeihan and others, that China actually only accounts for about 6% of assembly on iPhones. 6 or 7% I've seen. So China doesn't do high-end manufacturing. Japan does high-end manufacturing. Germany does high-end manufacturing. South Korea does high-end manufacturing. USA does high-end manufacturing. China is getting better at high-end manufacturing, but they still do a lot of the low-end stuff, and they're bailing out a lot of those low-end manufacturers who are just piling up inventory. China does not do the massive amounts of high-end manufacturing that a lot of those other countries do. Now, they are working on that. They are adding more robotics. They're adding more skilled workers. But they also have a ton of leftover old factories that are making non-value-added stuff like cheap plastic trinkets that really no one wants anymore. There's no demand for. Stock market is just a heroin addict. They're looking for any news, any good news at all to spin. But if these central banks are going to print enough money, it's going to go up. And if there's enough credit globally, enough access to repo, enough fiat currency created, the stock market will go up. And it will just ignore all fundamentals. It will just rise on liquidity. Phase 2, Alpha Dog says Phase 2, 3, 4, and 5 are in the works. Keep the market propped up at any cost. Trump doesn't even have to announce Phase 2, 3, 4, or 5. The Fed just has to increase the not QE programs. So just like we have not QE, I would say basically this Phase 1 trade deal being signed is like the not trade deal. I did not see that George Gammon video yet, Finance Freak. I saw his repo one from the day or two ago, and there's some things in there I don't agree with. It's a good video, but there's some things in there. It's saying that there's not a liquidity problem, but the repo problem is it signifies global problems. So there is some problems with that video. I have some disagreements with it. Overall, it's a pretty good video, but there was some problems in there. Because we now know for sure that foreign governments and foreign central banks were going into repo, were taking advantage of the Fed at the foreign reverse repo pool at the Fed. There was over $300 billion worth of foreign money at the foreign reverse repo pool. I mean, that's confirmed from like George Selgin, who covers repo extensively. He's been doing podcast interviews and writing reports to try to help the financial regulators and the Fed and Congress. The phases approach is smart stuff. The way to do it, watch and learn. Except that Chinese state-run media is not confirming what Trump's saying. So for weeks now, if not the last month, month and a half, almost 2 months, Chinese state-run media has not been optimistic. Has not shared the same enthusiasm as President Donald Trump, Steve Mnuchin, Cocaine Larry Kudlow, other people in the Trump administration. So Chinese state-run media is keeping things a lot more tempered. When does A3 Sky Warrior, when does it all collapse? Well, as long as all these governments and central banks can keep changing the rules about bankruptcy and solvency and not telling people what's close to bankruptcy and doing covert bailouts and all kinds of increasing in central bank balance sheets and credit. What the Chinese government, what the People's Bank of China and the Chinese government are doing now, they've ordered the banks to just hit the credit spigot, and there's $4 trillion going into the Chinese economy projected for 2020, and a lot of that $4 trillion will not be paid back. There's $4 trillion going in to the Chinese economy and new credit, and a lot of that's to keep zombie private sector Chinese companies and state-owned enterprises afloat. So as long as governments, and all these governments are doing it, so China's doing it, the U.S. is doing it, like people bring up how what the U.S. is doing with repo madness is worse, but in only like last week or the week before, China injected $120 billion in only a couple days. And then China's throwing another $4 trillion in new credit into their economy in the next 12 months. And a lot of that credit's not going to be paid back. They already have a credit problem. They already have defaults. And they're throwing more credit in anyway. There's already massive defaults. Blake, I like Peter Schiff. I just think he's wrong on the investments he picks out and on China. Because he likes these really crappy run mining stocks. And there's a time and a place to invest in mining stocks, but the average person should not be in, the average retail investor who doesn't do a lot of research should not be buying individual mining stocks, which is what he puts his clients in. And if you mistime mining stocks, you're going to lose over 50% very quickly. If you buy an individual mining stock and you don't do research, or you trust the wrong expert, or someone's taking a big $20,000 or $30,000 payoff to pump it, and you're wrong on the timing, you can lose a lot of money very quickly. Individual mining stocks, if you do not know what you're doing and you're a retail investor and you don't do any research on your own, is very, very dangerous. And I learned this the hard way years ago, because I've been in the gold industry now for a decade. So I learned this years ago the hard way. I did lose money years ago on stuff. And then you learn what people are really doing, and then you speak to a bunch of different contacts in the industry off the record. You know, guys, I know gold fund managers that will not go. I've asked them to come on a podcast. I know gold fund money managers who have told me that they've been flat out lied to by mining stock CEOs, gold mining stock CEOs, that they've been lied to on their face, lied to at conferences in their face, on the phone, emails, and they've told me some really bad things about some mining stock CEOs, and they will not go on a podcast and name them. Because they do not want to have assets under management pulled. They do not want to lose access to management. Because if they out one mining CEO as a liar, then the other ones will see that, and then they might not get any information from any of them. Yeah, the buying individual mining stocks, if you're a retail investor, you don't do any research, you don't know what you're doing, very, very dangerous. because these are bad businesses. These are not good businesses. They destroy capital most of the time. They do not consistently generate free cash flow. They normally have bad margins. The cost to maintain property, plant, and equipment, the mine, maintenance capex is enormous for some of these mines. And if the metals prices fall, or the project economics of the mine are not what was projected, the miner could be bankrupt within 2 years or 3 years. It can change very quickly. What if there's a pop in the silver price? So, this is a dirty secret. I did make a lot of money in mining stocks 2011, 2009, 10, and 11. However, if you go back and look at the financials of a lot of these mining companies, during that time period, yes, their mining shares went up, but actually a lot of them did not make the profits that were projected. They did not make free cash flow anywhere near the free cash flow that was projected, despite the gold price hitting as high as $1,900 and the silver price getting to, $48, $49. So they should have been minting money, and guess what? Most of them did not. What actually happened was most of these companies kept bringing on more and more marginal ore, and they couldn't control their cost. And for some of these mining companies, their costs actually rose faster than the metals prices. So yes, the shares went up, but the underlying business of some of these mining companies in 2010-11, they were not minting money. So they were making money, but nowhere near the profits, nowhere near the margins, nowhere near the free cash flow that was projected. And that, to me, is a red flag to management, that management does not know how to control costs or doesn't care. Both of them are bad. Either management is inept or incompetent or doesn't care. Only cares about enriching themselves. Thank you for the super chat, Justin. Okay, well, I just wanted to provide mostly that for the update here on the live stream show. So if you want to read more of the details of phase 1, I have a document that goes into the intellectual property, the tech transfer. The bottom line is, and Leland Miller says this at the end of the interview here. That's a CEO of China Beige Book. He says it here at the end of this Yahoo interview. He says, but despite the optimism surrounding the developments with China, Miller suggested the deal could be difficult to enforce. Quote, all the talk about the enforcement mechanism, and this is what people are saying, whether it's Bob Lighthizer, maybe Bob Lighthizer was told to say this, because I was under the impression that he didn't think anything was enforceable in China and he didn't trust the Chinese. So Leland Miller says, all the talk about the enforcement mechanism of the trade deal has always been a little bit tongue-in-cheek. There's no real way to make the Chinese do any of this stuff that we want them to here for the U.S. government, said Miller. Quote, but what you can do is put very big sticks and very big carrots, and that's what they've done. So the enforcement is going to be dicey. The enforcement to the other parts of the trade deal, like intellectual property, tech transfer, currency, competitive devaluation, things like that. So enforcing China to play by the rules. China hasn't played by the rules in 20 years. They've gotten away with it. And most people in the U.S. didn't care. Most of the Republicans and Democrats definitely didn't care. I mean, now the Democrats seem to care, now that they've lost the Midwest labor vote that Trump won in the 2016 election in Pennsylvania, Ohio, Michigan, Wisconsin. Now the Democrats care about that. But for many years, those people in the Rust Belt, those manufacturer and factory workers, were the majority of, was it opioid deaths from fentanyl? That's where a lot of the deaths are, in the Rust Belt area, because the jobs never came back. We'll see if Trump puts on extra tariffs. I thought he was going to put on more tariffs a couple months ago. He didn't do it. But we had that in October. We had the false alarm about phase 1 being done then. Okay, so I think I pretty much covered in this short little update. There's a lot of reasons to be skeptical about this. And the bond market is very skeptical. The commodities markets are very skeptical, which are the commodities China's supposedly buying. So you will have to watch those commodity prices to see if there's any effect on this. But the stock market seems fooled. Oh, Kyle Bass was on? I didn't check his Twitter to see if he put out an opinion on this. But he's been saying publicly, Kyle Bass has been doing interviews now for 6 or 7 months, and he was saying that Trump might just do a deal to get a deal. He might just do a deal to claim victory, to say, oh, we got a deal done. So he could use it for marketing for the 2020 election. Oh, we talked about Hong Kong. Actually, I have an interesting, I'll do this on another show. I'm not sure if it'll be tomorrow, but top institutional bank analyst Christopher Whalen put out a new blog article yesterday on Tuesday or Wednesday. And he was saying that because of the exposure to Hong Kong real estate and mainland Chinese real estate, he thinks HSBC is now in worse shape than Deutsche Bank. So I might do a show about that. He thinks HSBC is in actually worse shape now than Deutsche Bank. That was his opinion. And that's his job. He makes a lot of money analyzing all these different banks. So I will take a look at that on another show. I don't have time for that right now. It's already too late. And I want to go relax and get ready for bed. So I want to thank everyone for listening. Thank you very much to my over 200 Patreon account contributors so I can do this full time, make a living doing this, and create very useful information, content, and analysis along with my research. And hopefully there will be more unique bonus content behind the paywall in the next week or two. I've got some ideas. We'll see what I come up with. And I do have a couple other interesting videos that take more time. Those things take hours. Some of these videos with the slide deck presentations, they don't take 30 minutes or 40 minutes or an hour. Some of them take hours. So that's why I don't release all those videos all the time. But I will try to I have a couple of them that I've started about halfway on. I need to get the China bailout one out. It's really freaking nuts. I almost dropped the F-bomb there. It's really freaking nuts. All the different types of bailouts. It's getting very difficult to keep track of them, which is why I'm sure that she hired 12 bailout czars to do it for him. Because it's confusing to me, and I spent a lot of time looking at the different articles. There's so many different ones. So many different bailout levers that China's pulling. Okay, again, thank you to my 200 plus Patreon account contributors, my dozen or so monthly PayPal contributors. I saw that there was a couple more signups in the last couple days, and people throw me a tip once in a while. Remember, I also take cryptocurrency, even though Bill Holzer doesn't want to hear that, but I do accept as donations the top 6 cryptocurrencies. So thank you, everyone. Have a nice night, and we'll see what other interesting story the rest of your night or morning, depending upon where you are, since my listeners are literally all over the globe. And we'll see what other interesting things we have. But there's already a lot of skepticism outside of CNBC, outside of the Trump administration, about whether or not this Phase 1 trade deal will actually be adhered to, or whether there will actually be any progress to a Phase 2 from a number of different places.